The FX market, or Forex, is where currencies are traded. It's a massive global marketplace operating 24/7. Think of it like a giant tug-of-war with countries and their currencies vying for strength. When one currency weakens, another strengthens. Recently, the Forex market has seen some major shakeups, especially involving the US dollar and the euro. These shifts are important because they reflect changing economic fortunes. A stronger currency generally indicates a healthier economy. Investors are more likely to put their money where growth is strong and stable. Conversely, a weakening currency can signal economic trouble ahead. Germany, Europe's economic powerhouse, recently sent shockwaves through the markets. German government bonds, considered among the safest investments, experienced a massive sell-off. Investors were dumping these bonds at a historic rate. This might sound bad, and in some ways it is, but it's also a sign of something else: growing confidence in the German economy. Why the sell-off? Investors are anticipating higher interest rates in the future. When interest rates rise, bond prices fall. The expectation of higher rates suggests that investors believe the German economy is poised for stronger growth. This belief has sent the euro surging against the US dollar. Germany's new chancellor, Friedrich Merz, is a man with a plan. He's not afraid to spend big to get the German economy humming. Merz recently announced a massive fiscal stimulus package, injecting billions into infrastructure projects. This spending spree is designed to boost economic activity and create jobs, but that's not all. Merz is also proposing changes to Germany's strict debt brake, a rule that limits government borrowing. These changes would allow for even more spending, particularly on defense. The message is clear: Germany is willing to use its financial firepower to strengthen its position both economically and geopolitically. Section 4. The greenback stumbles, US dollar loses ground. While the euro has been flexing its muscles, the US dollar has been on the back foot. The greenback has weakened against major currencies, particularly those of its European counterparts. This decline reflects growing concerns about the US economy and the policies of President Trump. One factor weighing on the dollar is the uncertainty surrounding Trump's trade policies. His tariffs on goods from China, Mexico, and even Canada have disrupted global trade and raised fears of a trade war. These tensions have made investors nervous about the US's economic outlook. Section 5. Trade wars and tariffs. Trump's impact on the dollar. President Trump's America First agenda has put a strain on global trade relations. His tariffs, intended to protect American jobs and industries, have been met with retaliation from trading partners. This tit-for-tat escalation has created uncertainty and volatility in the markets. The tariffs have also contributed to rising prices for consumers and businesses. These inflationary pressures could force the Federal Reserve, the U.S. central bank, to raise interest rates more aggressively than planned. Higher interest rates can slow economic growth, making the US dollar less attractive to investors. Section 6. Crystal ball gazing. What's next for the dollar and euro? Predicting the future of currency markets is a tricky business, but here's my take. In the near term, I expect the euro to continue its upward trajectory against the US dollar. Germany's fiscal stimulus and the European Central Bank's gradual shift away from easy money policies are likely to support the euro's strength. As for the US dollar, its fate hinges largely on President Trump's trade policies and the performance of the US economy. If trade tensions escalate or economic growth falters, the dollar could weaken further. However, if Trump strikes a more conciliatory tone on trade and the US economy remains resilient, the dollar could stabilize or even rebound. Section 7. A shifting landscape, global markets. Brace for change. The recent shifts in the FX market are a symptom of broader changes in the global economic order. The US, long the undisputed economic superpower, is facing new challenges from a resurgent Europe and a rising China. These shifting power dynamics are creating uncertainty and volatility in the markets. Investors are closely watching these developments, adjusting their portfolios and strategies accordingly. The coming years are likely to be marked by continued uncertainty and volatility as the global economic landscape continues to evolve. Buckle up, folks, it's going to be a bumpy ride.